Good evening, members and guests for the day for the session on artificial intelligence in accounting. And this is a very special session, and we have a special invitee to introduce the topic also. In the absence of chairman, I request our immediate past chairman and technical man and DC Jain, that is dynamic chairman Jain. He was called when he was in the what's called in his chairmanship period, because he showed that the pandemic cannot stop the activities of the SIRC by using technology. So that's where the message to the general public or our members is that our profession is very capable enough to absorb all sorts of shocks, and we have come out of that shock and become the best performing region during his tenure because of his technology. And also he did the regional conference online, and these are the records during this time. So in the absence of our chairman Jalpati, I have requested Dungarchandji to introduce the subject and also give a formal welcome address today. Over to you, Dungarji.
Thank you, Panaraj sir. As requested and told by you, I first welcome every participant for an yet important and interesting topic what has been chosen today as to the artificial intelligence in accounting. In fact, taking a cue from what Panaraj sir said, I'm only reminded of a quote of Lenin, who said that in decades nothing happened and in weeks decade happened. So the adversity always brings out the best in us. Probably the best inventions came during World War period, and this COVID, apart from all the difficulties, has taught us a lot of good ways to take things and do things in a better way. And I'm reminded of Mr. Narayana Murthy quoting that the youngsters today are trained because of the education system, where the emphasis is given on the role making, not in problem solving. And probably using technology, the time has come that if you are not going to get into problem solving, you don't have a job at all, you don't have a role at all actually. And again, quoting from Narayana Murthy sir, he said that anything that is structured can be automated. So the most important thing that a lot of things is going to get automated is the accountancy profession. So in these challenges, how we are going to survive, how we are going to adopt, how we are going to adapt. So we are eager to listen to CA Manish to see that where all we could actually use the technology in our favor rather than waiting for technology to take over and we find for newer avenues. So we are eagerly awaiting to listen to you. And having said that, I know our Indians are known for finding innovative things, known the jugaad concept. So they'll find some way to see that the best comes out. But only thing is to use technology, you must always have certain information about the basics so that you can apply the jugaad concept or the newer concepts which has to be implemented. So we're eager to listen to you and wish all the delegates a very, very happy learning going ahead. Panaraj sir, over to you. I think we are. Panaraj sir?
No, yes, no. System shows offline. Maybe it got
okay,
disconnected.
Fine. I will increase the speaker in that case. CA Manish Muralidhar is a partner in audit and assurance practice. He's got 17 years of experience in the audit and assurance practice and has handled various audits of large and medium enterprises operating in segments such as manufacturing, life sciences, technology, and consumer businesses. His experience includes working on IPOs, IPO advisories, as well as auditing the listed entities. Manish also has experience in areas of US GAAP, IFRS, and Ind AS, and is accredited to perform audits under PC, AOB, and ISA. Manish also is an accredited facilitator for US GAAP, IFRS, Ind AS within the Deloitte network of firms. He is also a regular technical speaker at our institute, and we are just eager to await to hear from him on how all and where all we could use this artificial intelligence.
Thank you, Dugarji, for the kind introduction and setting the context. Thank you, Panaraj sir, yeah, for being here and for being along with us for this wonderful session that you have set up for us. So at the outset, good evening to everybody. I hope everybody is safe and healthy and in their own respective residences, offices, home offices, wherever technology reaches. I'm sure you are you're fine. We during the next course of maybe couple of hours, we will be talking a lot about technology and how it changed our lives and it will continue to change our lives. And that's where Dugarji wanted me to focus on in terms of what is in it for us as auditors, as finance professionals, both in practice as well as in industry, in terms of how we can leverage technology, how we can leverage in specific artificial intelligence, to our advantage, and not only leverage ourselves, but also enable co-professionals, industry, and clients in terms of enhancing their day-to-day professional life. Um, so in that context, while I'll share the presentation in a moment, I basically structured the presentation into three halves. One half, the first half, we will, first one third of the presentation, we will discuss about where technology has changed over the last few decades and how it has exponentially changed the way we perform our day-to-day activities and also day-to-day professional activities, and that will set a context into what we are talking about, the technology explosion. And somewhere in the middle part, we will talk about what is artificial intelligence as a concept, and how it is being used pervasively across industries, across professional groups, and how it is very important that we understand what it is and when perhaps even learn and become experts in that. And finally, in the last portion of the presentation, I will be focusing specific to how AI is important to us as professionals, and how it is going to impact the finance teams, financial accountants, auditors, and the like. And then perhaps at the end, I will also conclude by giving a few my own thoughts and feedback about examples of where AI in accounting is there, also way forward. How do we approach this particular aspect? Uh, so let me share my screen and let me know if it is in presentation mode. Yeah. This is on presentation mode?
No, I think you'll have to. Yeah, now it's there. Now it's fine.
Yeah. Okay. Okay. Fine. So, okay, let me start with where we all where we do start. What is the current environment that we are working in, right? If you look at it, it's a completely complex environment, wherein there's something in my screen. Selva, how do I minimize my video?
No, so if you click on PPT, video will go at the back. PPT, if you just click on the PPT.
No, it's part of my screen is getting.
If you click on the PPT, it should go at back, or else on the drop down of webcam, you can see always in front option should be unchecked so that the video will go at the backstage.
No, I'm not able to do that. Okay, nevertheless, I'll manage. Yeah, I got it. So sorry about that. So if you look at it, we are currently operating in a very complex environment, right? And where the organization dynamics are changing by the minute. And look at what we are talking about. There is increasing globalization, right? And I can get tired by talking about the kind of how globalization is impacting us. Just as a simple example, when the in the last 15 to 18 months, when one part of the world was getting impacted, there was other part of the world that was supporting. Just to take our own example, in India, we are very, very popular, famous in the world in terms of having databases and shared service centers in India. So even if somewhere else in the world is impacted due to lockdowns or anything, the work gets going on because somebody else in a different geography who perhaps is not impacted in the same pace and timing is able to support. Same is the case with backup agencies. Same is the case with back offices. So increasing globalization is going to stay, and it is only going to increase by the pace. Emergence of new industries and disruption of existing industries. What was the best billion-dollar company 50 years back is perhaps not the same entity today. If you look at the unicorns and the like, it is coming in the new industries. It is disrupting the existing industry. The way work is happening is also getting changed, and that the pace of disruption and the pace of new types of industries coming into the fore will only increase, and that is at the base of all this change is changes in technology, increasing in complexity of business, right? The business per se in many cases have not changed, but the way in the manner in which the business is being conducted is changing. Look at how we are, to give a simplest example, how we book air tickets or used to book. Now we are traveling a lot less. Gone are the days where you have ticketing agencies, you have printed tickets. Now it is a case where everybody can book an airline ticket from their mobile, and then even have their boarding pass mobile, and then check in, and then you're off, right? And so the way in which businesses are done is changing rapidly. Growing number of millennials workforce, and I'll talk a bit more about millennials and how AI in finance is going to impact us together is also I'm going to talk about a little later. But that's something that is changing significantly. Increasing technology penetration and access to information. Today, if any of us, I think there's a joke which I keep telling. Whenever guests come home, I think a day will come where we will stop even offering water. The first thing we'll do is offer a Wi-Fi password, because everybody wants internet connection, and everybody wants to be connected all the time. Constantly we have our mobile with us. Constantly all our devices are technology enabled. Increasingly even residences and commercial locations having IoTs, the presence of IoTs is increasing. Means everything is going to be connected, and technology penetration is going to be like never before. And obviously the evolving regulatory landscape. With ease of business, with ease of technology, with lot of penetration comes the risks, and with the risks comes regulatory oversight, and with regulatory oversight we know it's like a circle, right? So if you look at the way you've just described in the slide, the environment is complex and it is ever changing, and also the change is not at the same pace. So what pace of change we have seen perhaps in the last decade, the next decade, the equivalent change perhaps will not take a decade. It will be much less, and that is the world that we are living. Okay. So talking about the continuing to the previous slide, again all the facets, that is be growth, science, technology, environment, culture, wealth, these all become a complex web, and each of them is contributing to the changing environment that we spoke about. Now let me talk a bit about this millennials, right? Now, obviously, this is well-known fact. Who are millennials? They were born with technology. They grew with technology, and they are almost social networks is part of their day-to-day life. The real question is, why do they matter, right? And if you look at the bottom of the screen, if you'll see that the number, the percentage of workforce, the percentage of workforce of millennials has already reached 50% of general organizations, right? And it is expected to become 75% of by 2030. So what's in it for us? Why should we be focusing upon this group, and why we should be talking about it? The reason is their level of aspiration, their expectation, and their intent to contribute, give a value addition, is very different and at a very high pace than what perhaps we have seen in the past, right? And because of that reason, their attention span, their ability to decipher or do mundane tasks or do rudimentary tasks is going less. And as a result, you would you should be able to link this with what we're going to talk a little later about technology. Is because there you have a higher amount of this workforce, because their aspirations is different, their ability to process data pace is different. The expectation is they also want to do different kind of a job. So what a finance professional or an accountant was perhaps very comfortable doing a decade or two back, we may not be able to get this large workforce to do the same job in the same manner in which we have learned it to be done. Hence, it becomes important for us to focus on this particular workforce. And I keep harping upon the increasing technology dependence, and we'll see some examples. Look at this. We are seeing this increasing over the last decade, right? Kids are born with technology, right from when they are toddlers. They are used to technology. So when these people become into a workforce, you can imagine how comfortable they will be in use, misuse, and overuse of technology. But one thing you can't take out of this is technology explosion, and the use of technology is here to stay. Look at this statistic or this fact pattern that I put up on the slide. Less than 50% of businesses have a website. But look at how new companies are. 44% of online shoppers begin by using a search engine. And there are about 400,000 searches run every second on sites like Google and Yahoo. And this number and this pace is just increasing, right? So if you have your businesses do not have a website, right, then the chances of a shopper coming and looking at your product is going to be 50% lower, right? And that is how pervasive technology is. When I talked about pace a few seconds back, look at what's happening on the right side. This is just a statistic on how data storage, from an increasing data storage size, how it moved. This is very common knowledge, right? The earliest data sizes was as big as a refrigerator. Then it became a floppy disk. Then it became a CD drive, pen drive. That is fine. But the context that I want to bring about here is the pace. From the refrigerator size data to a floppy disk, it took about 15 years, right? Then it took about 9 years. Then you keep going down the line, it is taking hardly a year and perhaps even less as we move forward. And the exponential of storage size versus the timeline, if you see, the storage size exponential is much higher than the pace at which it always grew. What it indicates is this type of direction of exponential growth in technology at a much lower time is going to happen. We cannot escape that, and that is going to be we can either embrace it or fall by the way. And this is all the context setting that I'm doing before we get into the key topic. Look at the disruption part of it, right? We started basically by saying internet, right? Then came the social network, then the mobile, cloud. Then we're talking about big data analytics. We're talking about 3D printing. We're talking about Internet of Things, IoT systems, which perhaps most of you have at your home, all the way to nanotechnology and robotics, right? And if you go to the other end of the spectrum, we are going to the end of almost to the way of artificial super intelligence. We have several examples where at prototype level we are talking about artificial intelligence coming through, where machines are talking like humans, machines are interacting with humans as if they are humans. And the simplest example is Alexa, Siri, but the more complex examples are where you will not even know that you're talking to a machine. There have been videos that have been launched which are prototypes, which talks about you're almost like ordering for your pizza, and you're thinking that you're talking to a human being, but essentially you're not, you're talking to a machine, right? So what do we do, right? This is where I have said a few minutes back, business has not changed. What we don't realize is the way we do business has changed. And at the same context, accountancy, finance has not changed, but the way we do accountancy and finance and audit have to change. If not, it is some has already changed, and it has to change. And this is where I bring to the follow-up. If the has to change or have to change doesn't happen, we are essentially caught between the two T's. One is the technology phobia, and then there is a technology myopia. Technology phobia is it's a disruption in daily lives which we are totally want to be ignorant about. Myopia is you underestimate the power and potential to disrupt. Either of this or both of this is a negative T, right? And we need to be cognizant about that. Okay, a funny thing, this is not necessarily indicated to any person or any brand, but this is how perhaps it was in the 90s, where the television sets was huge and the person was lean, but unfortunately as the years went, the television set became lean, but perhaps because of sedentary lifestyle, we became a bit more obese, right? It's a funny way to put it into context, but that's how technology is, right? Okay. Another thing which we talked about, the technology, while the positives are there, the negatives are also there, right? It is creating a severe attention disorder, right? And I'm not moving toward this context to where AI will help us, because our attention span is reduced. We need to be innovative to search our allow our time to be used more on analytical, strategic decision making, and leave artificial intelligence to do the more mundane types of work. Because we have things like explosion in technology, yes, but it also has pushes us to an attention deficit kind of a disorder. So we moved from I need an app to we are saying I need an app, right? And I can go on and look at this. And look at this, how appalling technology is leading us to. We have, if you look at the picture over there are 4 youngsters sitting on a bench, perhaps friends, but instead of having a conversation with each other, they are texting somebody else, who's in some part of the world, right? So increasingly, our workforce is also becoming like this. We may have a room full of professionals sitting over there, but are not interacting with each other. And there is, and please remember this picture. When I come to this AI, I will also bring it to your context where AI is improving social engagement, professional engagement, and forcing people to engage, than machines forcing people the other way around. We will talk about that a little later. Okay. So, in a nutshell, where I've put down things like, what could be the mega shifts and disruption, they could be technology disruption, disintermediation, Uberization of services. Mr. Ramesh used to famously call this Uberization of accountancy, where, you may perhaps move to a situation where you just put a problem on the cloud, and then there are hundreds of professionals giving a solution. And then, that's in a way called Uberization, right? You no longer have to go to a person and ask for the service to be done, because the specialization is there with that one person. Now with information overload and explosion, everybody has access to information. The only differentiation would be the acumen of applying that information and to analyze and give you a solution. That is where the human will come into picture. Crowdsourcing, you've heard about this. We've talked about, removal of statutory requirement is a risk that we as accountants, professionals face. Then, how do we bring value add to our clients? And how AI, how technology will be essential or more imperative to enable us to do that is something we will talk about. Look at this. There's a continuation from the previous slide. Alibaba, the most valuable retailer, does not own inventory of its own. Uber, the largest taxi company, does not own its own fleet. It shares, right? Airbnb, the largest accommodation, has no leased or no real estate of its own. And similarly, Facebook doesn't create any content. It's people like you and me create content, and the company is running on our content. Yes, there are data fears, but that's how it is, right? So let's look at, when we can look at this, the same old thinking, or this, you'll get the same old results, and we need to change our thinking. Okay. So, if you were to introspect till this stage, this is the first 1/3 of my presentation, right? If you look at it, the present, we need to evaluate as to how vulnerable are we? What are the gaps? Who our real competitors are? And are we really different from our competitors? And then if you look at how do we want to design our future, it clearly looks like it will be a technology driven. We will be having to be client centric, and when I mean client centric, it applies equally to accountants in profession and accountants in in practice. And the word client is used loosely here to say whoever you serve, who's our product or service that you are providing for, right? Value addition service, that's going to be an underlying statement, right? Increased global outreach, that's going to be a norm. And then finally, we need to embrace disruption as an opportunity and not as a bane. The moment we try and embrace disruption, that is when we will be able to move forward. Else, we will soon be extinct. Right? Okay. I'll move to the core of the topic. So let's get into the topic of before we get into AI for accountants and AI for in accountancy, let's first understand what is AI and why now, right? AI obviously stands for artificial intelligence, but before you go there, some statistics again. There is a report by Gartner which says by 2021, which is we're already almost in the middle of it, AI augmentation will create about 6.2 billion hours of worker productivity globally, right? And it will create about $2.9 trillion of business value, eventually reaching out to $4.5 trillion by 2024. What it means is it essentially is creating so many billion hours of a worker equivalent time and a worker equivalent value purely by using AI. Means this is not actually human work, but it is technology working. You can imagine by the sheer volume and the value that it creates, how important this is going to be, right? And why now? We talked about it briefly. Say access to infrastructure, speed, and scale like never before, and we are seeing that on a daily basis. Massive data sets in a variety of mediums from a connected world. Yes, we are talking about data. You must have seen in the last 12 months, some of the biggest investors have invested in companies purely based on their ability to have rights over data. Today, data is the biggest asset that can be generated and that can be monetized, right? And then the third point is, wide availability of sophisticated AI technologies. Even as we speak, there is a plethora of AI technologies that are available. I myself have used some of them, and there is amazing value that it creates. And this is going to stay, and that's why this topic becomes very, very important. Let's pause a minute and talk about AI, right? AI in a very simplistic language, right, is it mimics the way humans perceive information, devise insights based on experience, and make decisions accordingly. You may think that, okay, is it replacing a human? The answer is a big no. What it does is it augments humans, means it aids human beings, it supports human beings. It is not a leverage, or it is not something that will replace human beings, right? The acumen that human beings have in terms of say deciphering a particular information and bringing out collective thoughts out of it to give a value add, that is not going to change, that is not going to be replaced at all. But what AI does is it helps the human being to put those data together, or sanitize the data in a particular format, or analyze the data for some level for the human beings to do at a higher level. So if you look at the definition, it says AI is the theory and development of computer systems able to perform tasks normally requiring human intelligence. That's a very Oxford kind of a definition, but in essence, it aids humans. It tries to think and behave like a human, but it at the end of the day supports. Now within the AI ecosystem, there is a lot of jargon, technical jargon that is used. Things like machine learning, natural language processing, supervised and unsupervised learning, robotic process automation, and I'll talk about a few of them in our context of a little later. But just to give you a few context, machine learning is nothing but it involves computers that recognize patterns in data and learn from it. So one simple example that I've seen recently on machine learning is, suppose there is a data ledger that a company, there's a customer base, and then there is sales that happen, right? If normally, what do we look at it? We look at a data ledger. There is a debit, and then there's collection, and then there's a due date. You get an aging report. I've seen an AI tool that is applied by one entity, wherein it can predict when the next payment will come from a particular customer. Because whilst there is a credit period, generally each company will follow each customer will follow its own sequence of payment based on their fund flow. Now, typically, we don't read through such patterns. The only thing today's accountants do is it collected, not collected, what is the due date? But looking at a pattern of transactions over a period of time, looking at the pattern of when that customer is making a payment, today AI is able to predict when the next wave of payment is come. Now imagine the benefits out of such machine learning. Companies will be able to forecast its cash flows much better. Companies will be able to forecast any exceptions in their credit risk analysis. Auditors can do wonders by looking at such data, right? And machine learning can have multiple uses. I just gave one simple example. Look at virtual assistants. There are many organizations who have done away with physical assistants or the secretaries. Today, I'm sure nobody, very few people will use the secretaries to book a meeting. All it requires is an Outlook invite. All it requires is your calendar, and you can put an invite. So you perhaps would not need a real person assistant. Whereas today's virtual assistants are doing much ahead. Not only are they planning their calendar, but they are also giving you indicative timelines. For example, your Siri is like a virtual assistant, right? No sooner you sit on your in your car, it will tell you generally at that point of time, if you leave at 6 o'clock, it'll assume that you're going towards home, and it'll tell you the distance, right? Similarly, the Google Maps, right? These are becoming virtual assistants. Unsupervised and supervised learning is nothing but, unsupervised learning is where you feed data and you ask questions and wait for the responses. Whereas supervised learning is nothing but it gives additional knowledge. Where suppose you say this is the database and this is how the ideal database should be, and you teach the machine to say every time a data comes in, you compare it with this standard or ideal database, it will compare and throw out exceptions. Means it is answer, it's supervised to say, give me exceptions. Now imagine the kind of benefits that you will have. You don't need to wait for an MIS. You won't need to wait for an audit to tell you exceptions, right? Predictive analytics is also an enhanced version of what I just talked about, machine learning, where you're predicting a particular sales pattern, predicting a particular credit risk, predicting a particular construction pattern. Oil industry is using predictive analytics in a big way to say where to drill, how much to drill, and when not to drill. And I'll give you an example of that. So there are multiple avenues where AI is penetrating big time. Right now, let me then generalize it to say how it will enable businesses to create greater value opportunities. Look at this. The first one, intelligent automation, which is nothing but automating the last mile by removing humans from low value and often repetitive activities. This is one area where there will be a significant impact. So today, as finance professionals, as accountants, I'm generically making a statement. There is a lot of data that we use, and a majority of our time goes in data entry. And today, organizations are perhaps one of the methods that they used is to move towards shared service model, right? But again, you are moving from one human being to another human being or set of human beings, right? But with AI, there is going to be intelligent automation when it comes. It is nothing but the moment an invoice comes, the moment a copy of a document comes, it goes to the scanner, the machine reads the content of the document and populates the relevant portions of the ERP system, right? So the question is, will that mean that there will be a job loss? Perhaps not. It is actually an opportunity for the same set of people who were earlier doing the mundane task of, or the low value task and repetitive task of keying in data to enhance and do some kind of analytics. Look at data, look at analytics, look at patterns, and then come with value add. So this is one area where we are expecting that AI will surpass all previously imagined value creation opportunities. Second one, hyper intelligent insights. This is like the advanced version of the analytics, right? Where you're going to give proactive and predictive patterns. We have always used to look at past patterns. You say, okay, sales, in the month of Jan, Feb, March, it follows a particular pattern, and we expect quarter one versus quarter one. We'll do a post factor, right? But what hyper intelligent in some AI is doing is give you predictive sales, and it is just not budgeting. Where you expect last year's sale 10% increase, you come to an approximation. These type of insights are going to take care of what are the economic models that is going on, what is the environment in which the businesses, what is the environment in which the customers and vendors are, takes all those inputs together and comes with a predictive model and then predicts the transactions, predicts the pattern. This will be hugely important for people in marketing, people in that the business teams in sales and business teams in strategy and operations. In finance, it will be more important when you look at if you are able to pick up a red flag about upcoming risks, upcoming issues in terms of any vendor, supplier, customers, etc. Transformed engagement, and this is going to be pervasive. This is where technology will engage people on human terms than the other way around. I'll give you a simple example. I went to an office, overseas, wherein based on your login when you do at the gate, not even at the office, when you park, when you get into the car and when you get into the parking, the building will recognize that this person, known person of course, registered person, is entering and is going to come into the office And today most of us are in shared spaces, right? So wherever you sit, based on where you log in your laptop or desktop, the environment which you want, which you have programmed the building for, will get engaged. So the required amount of light, the required amount of air conditioning, the required amount of technology that gets engaged, I have seen that happen, right? And so this is why it's a non-finance example, but increasingly AI will go into a field where it will be talking to us on human terms than we depending on machines. Today we depend on machines to give us data. It will be the other way around. Fueled innovation, right? This will exponentially fuel innovation, will push people to create new products, markets, and business models. And finally, most importantly, this is already creating an impact, is fortified trust. Increasingly, because AI is technology driven, obviously, organizations are using AI to their benefit by looking at 100% of its own data, right? Today, organizations have the capability to benchmark their 100% of the data for accuracy, completeness, and quality, right? And like I said in the previous example about benchmarking with a model file or a model standard, I have examples where companies have said if it is an MIS, it should match with the accounting standards, and then they say give me the exceptions. If it is a particular pattern of journal entries without a documentation, there are push reports that go out to the user to say the required documentation is 10 points, against which you have only populated 9, so it shows up an exception. And more importantly, patterns, analytics, data helps also to identify red flags, identify frauds, and also cyber risks, right? So this is all pervasive to across industries, but these are 5 key levers that where we are expecting that there will be a value generation from AI. Look at how a recent survey has indicated in terms of the benefits of AI. 64% believe that there is a competitive advantage by using AI. 54% believe that there is an increasing spend, investment, and integration of AI, and organizations spending almost 4 times than the previous year on AI initiatives. 74% have plans to integrate, on these within the next 3 years, and then 76% think that AI will be a catalyst for transformation, and then substantially, it will impact their individual organization. So, the percentages across, so many executives clearly demonstrating that, it's here to stay. And some examples of news reports which talks about where, AI is already making a mark, right? Look at tech giant. It says, AI has already helped it save $1 billion, and that's not a small amount. Oil and gas companies are turning to AI to cut costs. This is a real use of AI. Similarly, look at the last one, which is very interesting. Warner Brothers signs up with an AI startup that claims to predict film success. Look at where people are using AI for, from not just numbers, but also from emotions, right? It's able to predict film success. Incredible. Okay. Now, where are we in terms of from in the AI space? Before we come to this one, so looking at many companies, what we are seeing is they moved on from the experimentation stage, and they have moved on to making going into artificial intelligence at scale. So at AI experimentation stage, you will be data siloed across organization. You will have talent learning about data science. You will have governance at use case level. It will not be enterprise wide, minimal investment, and that's where 74% of the survey respondents were, and that's where they are playing. But as we move towards the right, where it is at scale, it moves a notch higher, right? Where data science talent deployed across enterprise, vision established with a business case, and an enterprise-wide ethics framework adopted, and that is where implementing, high impact AI at scale, becomes, implemented, and that is when the return on investment will start showing some kind of, impact. But the final stage is where the organization is an AI fueled organization, and there is the survey clearly showed that organizations that are fueled by AI have beaten S&P index by 4 times over the 5 years, clearly demonstrating that organizations which embrace AI and have taken it to the full benefit are having or bringing the highest value addition. And whilst it is just less than 1% of all organizations, make no small thing about this. This is going to be the norm. If businesses realize that this is where the maximum value addition will come, this is where they will definitely move on, and this is where everybody of us need to move, right? So when we talk about AI fueled organizations and how they deploy it systematically, right? These are model organizations, right, where they look at how utilizing data as an asset, right, through real-time processing, how they employ a diverse talent ecosystem to leverage future of work insights and reimagining work. We talked about the millennials, right? This is where it is. How they utilize a holistic ethical framework, because as much as technology is here to stay and as much as technology is going to be penetrative, we also have to be cognizant about the ethical framework around which the data usage will come into picture, and hence organizations have to devise a very strong framework, ethical framework to how they will use data, and that will create trust amongst various stakeholders. Human-centered digital experiences. We talked about human interface instead of machines interfacing the other way around. That will enhance the humans to create higher value add by being enabled by AI. It's not by replacing each other. Utilizing partnerships, partnerships. This is where we are seeing increasingly organizations are interacting with startups in this space to create a different value add, and obviously deploys across all business processes with a new operating model. And the benefits is obviously rapid decision making, satisfied workforce, performance, of course, value addition, and of course shareholder value and innovation and stuff like that. So this is just an example of what we spoke in the previous one. So data as an asset. Today, a lot of organizations are moving through data collection to vision, computer vision. Where I talked about the scanning of documents. Here is an example of scanning the store shelves. So recently, I've seen a program where there is a bot, and this is something in Amazon. In Amazon, fulfillment centers, they don't use manually to go and scan. The guy who is packing the boxes is in one place. He is not moving around. He or she is not moving around several kilometers of shelves. All he does is puts the packing list into the program. The packing list goes to the robot. The robot will then move into those shelf areas, picks up the product, brings it near the guy who's the picker, and the guy who's sitting there just picks it up, and the robot takes the entire shelf back to its place, and immediately the other shelf is brought to the next robot. How does it do it? That is, it's doing because each of those shelves is monitored by computer vision, and the barcoding will tell the computer which shelf, which shelf, and which column to pick from. Imagine, when I was looking at it, I was stunned. It would have reduced workforce, it would have increased accuracy of picking, and it would have simplified the whole process significantly, right? Similarly, data processed through data in motion. So as data is, the sensors is there. This is a common data. This is a common thing we are seeing in walk-ins, right? The moment you walk in a store, earlier the people used to be there to count the footfalls. Now no longer. You just walk in and you're counted. This is also being used in warehouses and in toll systems, where the simplest example is the easy pass, right? You just pass through, picks up, and the revenue is accounted for, right? So this is where sensors are being used. Similarly, the autonomous data making through machine learning and robotic assistance. So where the invoice comes in, the purchase order is already read in the machine. It compares with the invoice. I identifies that the goods are received again through the artificial intelligence, and a payment schedule is put, and perhaps a payment also is made, right? This is increasingly happening, and these are examples of where data is used as an asset. On the talent ecosystems, I think this is going to be the emphasis if we were to need to build a good human workforce which will use AI effectively. If we are, we need to take care of them. We have the culture of innovation. We need to give a lot of training in this particular aspect, and bots and humans will need to coexist, and we need to work together. Look at the example at the bottom. Google reportedly has more contract workers than full-time employees. Means they're getting a lot more of data and the insights from people who are freelancing and working with them than their own employees, right? And the last one is, generating, having the framework and, generating a trust. Some organization need to think about, the data should be robust and reliable, of course, privacy, it needs to be safe and secure, transparent in how it is being used, and, how it is reasonable, responsible, and accounted for. Uh, so that's the examples for those three aspects. And then if you want to add more on the human-centered experience, the expectation and from what the surveys have said till now is wherever organizations have used AI, there is an increased level of work satisfaction, because people are now going to focus more on the qualitative part of their work instead of just doing the same old rudimentary kind of a job. And also, the interaction of AI with human beings is becoming more and more human-like, and than the age-old way of computer speaks. You could figure out. Today, each one of you can also experience this with your own Alexas and Siris and then the Google Duplex, which sound human-like, right? And then as and when more AI is spread across the whole world, the interaction of AI in the same ecosystem is just going to increase. Organizations will talk to each other using technology. People will talk to each other using AI, and so on. And the robots is here to stay. Um, on the last segment, I gave the example of Amazon, for how it leverages AI throughout this business, and that's a wonderful example where the entire ecosystem that it uses, whatever is put out there, there is an artificial intelligence that goes through that, right from material planning all the way to customer enrichment. And that's an amazing way that Amazon is able to leverage AI to its business. So we talk about the three forms of AI maturity. One who is at an experimental stage, and one is at scale, and AI fueled organization. And across these five verticals, where it is, whether it is using it in an asset, ecosystem, so on and so forth. Obviously, the maturity level will be different based on the segment that you are in, and this is just give an indicator. As you move towards from an experimental stage to the fueled organization stage, the impact that you will have to be in each of the column would obviously be higher, which is the dark green shade, right? So this is just a example of what we were talking in the previous slides. So that now we come to, why is AI relevant for accounting and finance? I'm sure now by now you've contextualized, where we are, where we should be, and what is AI and how AI is going to be pervasive in how we do businesses, not the business itself, how we do businesses. Now, these are some of the predictions that have come up, where we think this will be how digital technologies will transform, how finance delivers value. And I'm using finance a little, broadly, be it finance and accounts, your business finance, or even auditors for that extent. The first one, there is a clear path or pattern towards something called as the finance factory. What does finance factory mean? Would be essentially be a mix of what I just spoke, where transactions will be touchless as automation and blockchain reach deeper into finance operations. You know the concept, and I'll talk about blockchain a bit more. The vendor, you or the customer and your organization. Today the touch points is somebody raises the invoice, a physical invoice used to come, now a digital invoice comes, you still look at it, you then record the transaction, and then you make the further transaction, right? Now in this, there is a simple, if the customer creation is modeled, if the vendor creation is modeled, if the the transfer of data between organization is foolproof and it's secure, then all it requires is the transaction comes in, processed by AI, transaction is resolved by AI again. So increasingly there is an expectation that non-core, non-key, regular, repetitive transactions of finance teams will become touchless, will become automated, will be done by AI. And this is reality for some organizations, and it will soon, we expect that it will become reality a lot more. Then what the rules of finance, right? Obviously that needs to change. So with operations largely automated, finance will double down. What it means is it will increase on business insights and service. So the more it'll reduce its efforts on simpler transactions, and it will focus more on how finance team will provide business insights, and that will be invaluable, right? Today, like I gave the example of not just I've done 1,000 transactions recorded in a month, but what are the outcomes from the 1,000 transactions? What insights and service can I provide to the business teams, to the other functions in the organization? That will increase. We don't know whether success can be assured to that, but surely that's going to happen. And skills required for finance professionals to do that will obviously need to dramatically change, right? Because today we now need to learn newer ways of using technology. Excel analytics, excellence will no longer be the only skill that you would need to acquire. You will need to acquire data analytics skills. You will need to acquire how to interact with AI, right? That's going to be a requisite for a finance professional. Look at finance cycles. In near future, if not now, organizations will not be waiting till the month end or the month close to prepare MIS or to prepare financials. There are many organizations that I know even today, they can real time look at where their business is on any given point of time. I know an organization which tracks their sales people real time. I mean, the head of finance has a large screen dedicated for that, looks at where the salesperson is moving on the GPS, right? Based on the distance the sales guy covers, then they map at the end of the day whether the sales has been made, and it is all real time. And then the recording of the transaction and this commission is also interfaced, right? And this is one aspect of finance. This will become exponential. We will be looking at nobody will have the patience in the future to wait the weekend or even a month end for a month close. The finance cycle will be shortened. and the audit cycles would also be shortened, right? And it will aid in increasingly faster decision making, right? Self-service. Again, like it is said there, finance will be uneasy about it. What it means is self-service of finance and accounting. If suppose there are smaller organizations which perhaps doesn't need hundreds of workforce, you will even the marketing sales guy can do a finance accounting, right? You will put the sales invoice, you will put the purchase bills, it will get accounted, and your transaction is done. Perhaps that will happen in silos, but self-service will become a reality in some segments. Operating models will change, right? Newer service delivery models will come in. There will be a lot of robots and robotic process assistant that will come in. There will be like we took the example of Google. There will be gig workers, there will be crowd working, there will be freelancers, and so companies may not need to rely only on their finance teams to give them financial statements or financial accounts. It can, in silos, spread out the data to a diverse kind of freelancers who will, using AI, can do the work for you in packages and then give it back to you, and you can then use it. ERPs will change. ERPs will get customized more to AI. I'm already seeing where ERPs are directly picking transactions from computer vision, computer sensors. So ERPs also will undergo a change. Data, obviously, is pervasive over it. The proliferation of APIs will drive data standardization, right? But it will also be not enough, is the expectation. And there will be a lot of data cleansing that companies need to start bothering about, because with the exponential of data, earlier the only botheration was storage, but now storage is also, there's a limit to storage. So companies need to look at how they will manage their data, how they will cleanse their data as well. That's going to be one of the issues that finance will need to delve with as digitalization increases. Workforce and workplace, obviously. Workplace, particularly, I would want to stress there. Look at what happened in the last 15 months. We all thought we'll go on a standstill mode, but life went on, and we used technology to our advantage. The same technology that we used to perhaps not give so much credence is the same technologies. The organizations which were more technology driven were able to tide this disruption lot more comfortably than the others, right? So but it comes with its own risks, right? Which we saw. We had higher elements of cyber risk. We had higher elements of issues where companies were not sure whether the workforce was actually working or not, right? They may not use their company networks. We never knew. So this will create some kind of disruption, but this is something that finance teams will also have to start looking at it. Just a time check. We are just 1 hour. Okay. I'll just talk about three of the emerging technologies that are coming in, which will have an impact on finance teams with some examples, and then we will move on to say how the way forward, right? So RPAs, I'm sure many of you have heard this terminology called the RPA. RPA actually stands for Robotic Process Assistant. So it essentially it processes data, and based on a particular algorithm that you have fed. So what is an RPA? It is a coded software. Yes. It's a program that replaces people performing repetitive rule-based tasks. Yes. It is a cross-functional, cross-application macro. Yes, that's a technical terminology. What it is not a robot which is walking and talking, as we generally think robot is. It is not a physically existing machine or which processes paper, and it is not an artificial intelligence on its own, right? It just processes data. So it is as simple as, reads a particular document, records the transaction, right? As simple as that, it validates the data, whether all columns are filled, whether all rows are filled with as compared to a predefined parameter, and it performs it accurately. The biggest benefit of RPA is it does 100% of the job all 100 times accurately as it was programmed, right? There will be, it's a zero error kind of program, right? Obviously the program has to be tested well before you do that, because if the program is wrong, everything else will go wrong. So this is the kind of an illustrative examples where there is opportunities, RPA opportunities in a finance function, and let me touch upon a few of them, right? Within accounts payable, receiving invoice, approving invoice, releasing the invoice, preparing payment run, perform reconciliation, perform spend analysis, and managing queries. Like, these are the various facets within accounts payable. Now look at the color coding. Now green color coding, which indicates that about its highest amount of automation level is possible, right? If you look at the bar below, right? And what is the level of risk? The level of risk the process entails is lowest, because it's the most simplest. You're just receiving the invoice through email, through a portal, through a site, right? So risk is the lowest. The ability to automate is the highest. So this kind of activity should be the first go-to for any finance function to use RPA for. Look at the next one, approving invoice. Now approving invoice, it is of gray level. Generally approving invoice will have many facets, right? Looking at who the customer is, you will have a personal interaction with that particular customer as an accountant as well. You will look at risk profile, you look at what's happening in the world. There are certain aspects to it, whether before you can approve it. Hence perhaps automation is the lowest. Risk is also at a medium level. Look at as an example of the last but third, which is perform vendor reconciliation. Again, a very, very simple job. You have a vendor statement, you have your statement, you reconcile both the statement, look at what the exceptions are and throw out exceptions. Reconciliation only throws out exceptions, right? Again, robotic process, high application. Is there a risk? The answer is high, because like in bank reconciliation statement, it is reconciliation is just not number which adds up to the difference, right? You need to put it in the right bucket. Why the differences come, right? And hence performing reconciliation may be simple and it can be automated, but if you automate the reconciliation approval itself or reconciliation itself, the risk is high, because the risk of putting in the wrong bucket is higher. So just to give you an example of how various facets of one particular function can be performed through a robotic process application, and what are the risk possibilities. Similarly, let's look at general accounting on the other side. Journal entries, high possibility of robotic RPA. Even for a simpler example of RPA today, even the closing entries like monthly ledger settlement, many of those are automated entries, right? Your exchange fluctuation entries are automated entries. So I'm just giving an RPA just one level higher, where it even record journal entries based on a particular transaction pattern. And if you look at all of them are high accounting. The arrow is while the risk is high, but the ability to go for is in between 20 to 50% or less than 20%, because general accounting is specific job. You need to look at some various aspects to it that before you get into the actual accounting. So this is the end of spectrum. So the borderline or the underlying statement here is, any of these processes which are repetitive, low risk, should and are typical candidates for robotics, typical candidates for finance teams to move towards RPA and leverage the human resources that are released from that process into more qualitative aspects of analytics, of doing insights, and those kind of activities. I wanted to give just one case study of how invoice processing, automation of the manual steps helped, the processing time to be reduced, and the value in processing time per invoice being reduced, and how rework was reduced. Before RPA, let's say 20 full-time employees processed 30,000 invoices in a month, and they took about 8 to 10 minutes per invoice, and there was about 1% of rework. As they went through this invoice processing robotic application, wherein it followed a simple process of downloading the list of the invoices, carrying out the line by line matching of the invoice to the PO, and summarize the results of the PO invoice matching the report. This was the process, and they automated it. After doing this, the single bot could process about 10,000 invoices in a month, right? Which was being done by maybe 1/3, that is about 6 employees, right? 6 to 7 employees. It was done by one single bot. From 8 to 10 minutes per invoice, and this is where organizations are focusing more, not more on the employees' benefit, because they're putting the employees in some other work. But from 8 to 10 minutes per invoice, it is being brought down to 3 to 4 minutes per invoice. And most importantly, zero rework. Why? Because it follows the algorithm. If it doesn't come to the algorithm, the invoice is rejected straight away. There is no scope for error. So the potential opportunity was where it was a simple invoice matching for exact matches. They have used it, and the benefit was was here to see. Now let's move on to the next aspect within the umbrella of AI is the AI, or the cognitive automation. Cognitive automation, cognitive computing is nothing but it employs technology and algorithms to extract concepts and relate the data. It is no longer just say data A matches with data B, hence it's a yes. It goes beyond that. It understands the data, it understands the past data format, past data inputs, and then relates it to known patterns, and then gives out an answer. Similar to what human intelligence do. When we look at a person, when we look at a transaction, the first thing our mind thinks about is what we know about the person, about the transaction, and then we respond or react as the case may be. Cognitive computing is nothing but similar. It is making machines think, analyze, and react/respond to a particular transaction based on how we want it to. So it is human intellect mimicked by a computer for accomplishing a particular task. What type of tasks? Detect key patterns from billions of transactions in real time. Improve customer understanding and activation through personalization, influencing desired actions. I'll give you an example of the second one, cognitive engagement. Today, if you go to say an Amazon site and you browse a particular product, right? It will give you similar products. That's the simplest cognitive engagement, right? If you look at want to search for a mobile, it'll give you say similar mobiles in the same range. It won't stop there. Then you move to Facebook, automatically advertisements relating to Amazon will pop up, or to mobile phones will pop up. You go to Instagram, the same pattern will follow. Go customer centric a little bit. There are organizations, especially in retail, which are using cognitive engagement in a big way. Today, if you walk into an online store, or to a store, the salesperson, in the good old days, the salesperson would know you and then say, "Ye aapko suit karega. This will be better. Why don't you do this?" Today, you have apps in retail organization where you go there, you click the photograph, you put on your app, it will show you how you look in that particular dress or the clothes, right? and that will then suggest you to go to a particular location in that same store to say what best you will be even better for you based on what how you have seen 2-3 examples. This is cognitive engagement, and this is where it will become personalized, and it will influence desired actions as well. Cognitive automation, again, automating repetitive and known patterns, and it'll involve human decision processes. Cognitive sensing and shaping, this is at the other end of the spectrum, where it will build deep understanding, market dynamics, and give you even insights on disruptive trends that will come up in the future, which will enable you to strategize today. I briefly talked about this in some time back about the natural language processing, and how natural language processing is being used to interpret the human way of doing things. This is simple. As we speak today, if I had my Siri on, it would be recording the way I am talking. Perhaps even tell me after 2 hours that you've spoken the longest in the last few weeks, and give me such insights. But on more serious note, organizations are going to use natural language processing and natural language generation to ingest or absorb data and spreadsheets to give more data driven outputs in day-to-day life, where it can help, where it can come up with cyclical narratives, where ongoing manual generation of reports, memo, dashboards, it can give out, it can do analytics, time consuming reporting, which was about drawing 5 or 6 different reports, collating it, and then coming to exception. All this the natural language processing and will be helpful. Blockchain. This is I'm sure again you would have heard this concept a lot, and this is more today's world. It's being used more in the finance segment, in the finance businesses or finance industry. But again, this is created a new what do you call that new currency, Bitcoin, or the coin business, right? The digital currency, right? Blockchain is nothing but where it brings in correlation between two data and does a automatic check, and surpasses all kinds of human intervention. So end to end, from procure to pay to sales, to order to cash, to warranty management, loyalty management, everything is interchanged, and you would the end from initiation of the transaction in one company to closure of the transaction in another company, end to end will talk to each other and deal with it. So all finance would need to know is to operate this blockchain and use it to settle transactions, right? These are several examples of where blockchain is currently being used, and is being used by finance teams to facilitate their transactions, procure to pay, cross-border payments, loyalty management, and so on and so forth. More technical slide. Just move on. So how finance and accounts professionals can approach, right? So one of the things we can say, it will not impact me, or it is so dramatic and so draconian that perhaps I will not survive. I will not learn AI, or I will not understand AI. I think both of those approaches will be very very damaging. It is no doubt overwhelming to think about the prospect of AI and how widespread it's going to become, especially when it is being predicted that some of the skills that accountants will be replaced by automation. But I think one of the things that is coming up very clearly is that we need to embrace AI in accounting in a big way. We cannot turn a blind eye to it. We have to educate ourselves to that, and we have to invest in new systems to be able to be enabled to be used or scale up as the AI is moving exponentially. This timeline is nothing but similar to the timeline I showed you about how exponentially technology is moving. Um, Look at from 1950, that is when originally there was something kind of a thought process of what could be an alternative to human. In 1956, the first time the term came, and then it went down this channel, and then we are talking about genderless is one part of it, but AI is going to be like a norm. Artificially, everybody will use AI as we move forward, as the line moves forward. Right. So from a profession perspective, from if I look at it, position for the future, understanding technology and apply to accounting, it is intermingled with what is the long-term vision for AI and the profession, and how do AI and humans work together, and how are accountants using AI capabilities. So, like I said, a while before, one is we need to embrace AI, and you cannot ignore the same thing. Similarly, we need to identify, even as we sit today, which of those regular day-to-day tasks or mundane tasks that we call it can be, delegated to AI or AI like robotic process assistants. Identify tasks. It will be ideal for those repetitive tasks, and so that it gives us more time to do more critical thinking. Essentially, one of the examples is wherever we think, oh, I needed more hands to help me out on this, is an area where you should critically think about, can I use AI? Can I use AI to give me a solution? Third point is we need to balance AI use. Please, this has been talked about at various fora. AI is not going to replace professionals. AI is going to enable professionals. So if we look at AI as an opportunity, we'll go long. But if we look at AI as somebody who's going to threaten us to our existence, then we'll go short. So we have to balance AI. We cannot replace everything with a bot, with an AI, and hence we need to look at it from that perspective. And then adapt to this change. It's going to be difficult. It's not going to be easy. It's not like a change in a Companies Act or change in tax laws that we can read up and can do it. It would need a lot of compatibility, and working together to scale up on AI as we, because the exponential support that AI will give, and our pace could be very different. So we need to learn to adapt with AI as we move forward. Obviously, for the future, we need to look at, focus on the purpose, aid in better decision making, how this will solve our business, how this technology will be used in solving problems and solving emerging problems. Look out for what are the emerging technologies that is coming up, and how do we want to adapt, and obviously have a very, very, what do you say, flexible attitude towards AI. Maybe I'll also give you at this point of time some examples of AI in accounting, and one of the most common examples that I can tell you of artificial intelligence in accounting, which is coming to the fore, is identification of frauds. And why I'm telling this is because organizations are using technology to monitor pretty much all of its transactions. The detection prevention by analytical patterns and monitoring every document is becoming possible. And because that is possible, its ability to red flag a particular transaction is which is out of the norm is becoming easier. So it not only is able to figure out some patterns of possible fraud, but it also is enabling organizations and auditors alike to look at these patterns, to actively look for if there is any red flags and flags. Second point within the same segment is it is also giving ability to organizations to compare transactions with accounting standards, with laws, with regulations, and give you an outline. So not necessarily everything is an error or a fraud, right? It could also be incorrect accounting, incorrect processing of a transaction, incorrect presentation of a transaction. So if you teach the machine to compare with the ideal, it's enabling organizations to give red flag even before it goes into a financial records. Second aspect is benefits or examples of AI in accounting is hidden insights. Today we look at data in a particular way. We look at, let's say if you're looking at customer aging, we only look at names, we look at columns, we look at the amount. But if you combine this data with credit risks and with what the companies, what the individual customers' businesses is doing, and then look at credit risk analysis in total, perhaps the insights will be way different than when you look at only the aging part, right? Companies are able to discover hidden patterns, hidden trends, and it is also giving competitive advantage to companies which are exploiting this part of AI to better prepare for in their business. And obviously, it makes decision making and data accuracy higher. Third aspect is it is enabling organizations to better forecast. We talked about predictive forecasting, predictive transactional forecasting. So this is AI is also enabling, because of it uses a lot of data, relational data. It is also enabling them to compare data and come up with better forecasts, right? The other part is the one which I talked about is on data input automation. This is where the examples of computer reading data, computer listening to data, computer looking at motion, movement to capture data. All this is enabling accountants to not go through the fact of looking at a voucher, at a document to record a transaction. The act happens and the transaction is recorded, and this is where I talk about data input optimization, right? And also the example is where because of say the data, I already spoke about this. 10 aspects of a particular transaction needs to be accounted for or recorded. Only 8 is done. The system will prompt the user to say 2 is not yet done, and will follow up, and it will make sure that the accuracy of data is there. So the input data automation is pretty much there to be there. Due date. This is one feature that I've told about, where it is analyzing the pattern of a particular vendor customer and helping with the organizations to better focus on risks and ability to capture forecasts, right? Closure processes, better and faster audits is obviously one of the benefits that AI is seeing in accounting, and more. The last one is risk assessment. Obviously, with data and sophisticated analytics, risk assessment also is going on. Coming back to we talked about position for the future. We talked about understanding technology, and application to accounting is where I just spoke about, where various accounting problems could be resolved through AI. Obviously, roles and skills have to be compatible. There would need to be a role change. There would need to be it needs to be complement to the business context. And also there will be practical challenges. We talked about privacy. That is where the framework will come into picture. Economics of AI. Obviously, one of the thoughts that I'm sure it has come to your mind is, okay, this is looking all bright and nice, but how do small organizations, small practices can get benefit? Currently, perhaps it is a little bit too expensive because it is a high-end technology. But as the use of AI will become pervasive, this will become a little bit more inexpensive, a little bit more user accessible to a large population, and the economics of scale will come through, and the cost of AI will fall. But this is here to stay, right? Institutional issues, we talked about regulatory oversight, and how this will enhance comfort of stakeholders. In fact, one of the things that came under this aspect is there is an expectation that the so-called preparation of financial statements and audit and filing the results perhaps will become a folklore. The moment books are closed, the audit is done concurrently, 100% audit is done. Perhaps the next day results can be declared. This will be honey words for some of the companies who would like to publish faster. But I think that will be a reality soon. Equally, what I think will be reality will be the relevance of an annual report may lose its significance, because if financials, all aspects of financials, all aspects of MD&A is available, online, right? The relevance of annual report is be lost. We have actually seen fast, small snippets of this in how AGMs were conducted in the previous year. In good old physical days, AGMs used to be in an interesting avenue. But today in virtual world, questions, answers, and everything is in virtual. It becomes more structured. It becomes more time effectiveness, and even the effectiveness of the meetings have gone up. So while that was forced on us, this will become a norm as we move forward. So what could be the next steps for finance leadership? We talked so much about AI, right? What could be the next steps? There are four aspects to it, right? One is how do we need to manage this whole thing? Obviously, this cannot be a success if the organization does not have an innovation culture. Then the organization needs to build a culture which creates a culture of innovation, hyperactivity, passion, and giving a free hand to having a disruptive force, positive disruption. But it would obviously need investment, right? So for the innovation culture and investment will go together. Talent, we talked about building your own talent, giving them better opportunities, but also perhaps the finance leadership needs to focus upon what are the skill gaps that today's finance teams have in order to reach the goal of an AI enabled finance organization. And if there are any gaps, how do we fill it? Can it be filled only through training, or can it be augmented through talent from outside, right? That's going to be a very key driver for enabling this approach. Build and test, right? No organization worth its salt will say, okay, I'm impressed with AI, whole hog, I will then now remove all my shared services teams, straight away I'll go into an AI. I don't think so that's going to happen, and it's going to be futile if any organizations do that. But what will happen and what should happen is build and test. That is, make small proof of concepts, make small attempts to say, okay, let me try and automate my payment cycle for these customers, or maybe let me try and automate or use AI in certain aspects of my finance cycle, and see the outcomes of it, see the benefits of it, see how I'm enabling the other services, then look at scaling it up. And that is what finance leadership should look at and should think about actively before they scale it up. Obviously, the last part would be, once you're through with all those things, then you're looking at scaling the successful proof of concepts at the enterprise level, and then realizing the gains. The catch here, or the focus here should be like like it was told, what can be measured can be improved. So it is important, as accountants, we know measurement more than anybody else, right? So as we scale up proof of concepts into large scale, we should have the ability to measure the success, measure the value. It could be the number of hours, it could be the number of the value saved in terms of time, value saved in terms of employee cost, but you should measure, and then only then you should be, as a finance leadership, should look at saying you've been successful in an AI approach. Some closing thoughts. It's important to grow, but it's more important to remain nimble, and you're never too big to be nimble, right? Obviously, success. It is avoid disjointed from AI, but it is not always what you see, right? Of course, do not overcommit and under-deliver. So AI is also there. As a finance team, you say AI will now do everything. You'll get your MIS by the second of the month, and if you're not, don't do your POC for the proof of concept properly, perhaps you will overcome it. There's a place for everyone. This I specifically put to re-emphasize on the point that we as humans are here to stay. AI is not going to overtake us. It's going to enable us in a big way, but we have our place. Not that I'm equating us to a camel. Yes, you'll be surprised what you can achieve by stretching. Look at this. I like this. What Elon says. If things aren't failing, you're not innovating enough. Means if you want to do the same things again and again, perhaps you're not innovating and you will not fail. But if you take risks, if you plunge into this and say create some value add, imagine the value that you will create for your finance organization, for yourself as a finance professional, and then possibly create value opportunities for several people to follow you, right? So, I know I'm not going to take all 3 hours of the session time. This was a very unique concept, which, I've spoken about a couple of times earlier. Some of them who are attending this may have heard me speak this, but this is something that is going on. This is going to be what do you say? The in thing going to be maybe next year or some other time when I speak about this. I will speak a little bit more and maybe differently than what I have, because it's such an evolving topic. So this is where I'll pause. I know I didn't give time for Q&A. I want to park some questions for now. So if Selva, if there are any questions that have been queued up, I may not promise that I'll give you all answers, but let me see how best I can respond. Any thoughts, Mr. Dugarji or Parag, before we go into Q&A?
Silva.
Sir, I'll share the questions in 1 minute. Screen visible, sir?
Yeah, it came and went. Yeah, I can see now. So is there any certification which can help in digitization, automation, analytics, analysis, etc.? Yes, there are several certifications, nothing that comes to my mind at the top of the mind. But I think more than certifications, you need to have experience in ability to understand how to digitize and how to automate transactions. So maybe there are courses which will go into the IT realm. But there are courses available to understand on digitization and automation. Will AI really make certain jobs and functions a history? The brutal answer is yes. But if we reskill ourselves, if we upgrade ourselves, there is a lot of what do you say, scope. Let me give you a real example. When I cleared my CA, right? The market was ripe to say ERP consulting. I don't know what was the terminology they use. They said CAs with ERP knowledge, they will take over the entire CA business. People will not be able. There will be no business in audit. Everything will be taken by ERP and so on. I'm sitting here 17 years or 18 years since. Every function, every job has actually elevated itself, right? And I want to take an out of context example. In the recent Olympics, I think it was in the 200 meters race, each of the 8 finalists created their individual records. And yes, of course, there was one winner, but that doesn't mean those individual 7 people who created their individual records did not find success. They found success. Similarly, AI will take away some jobs and simplify, move human job into automated, but the same human beings will get into some other roles in the finance function and create value. That is why I said you have to embrace AI. RPA, which is the right one for SMEs to substitute accountants, as quality and learning accountants are in shortage. So if I'm sure this question was asked before we looked at the various facets of, say, accounts payable, payroll, finance. So if you look at each of those facets, whichever facet is high likelihood of automation, low risk, will be the right ones for organizations. For SMEs in particular, obviously cost benefit will come into the fore. So there are companies, organizations which provide RPAs as a business, and you need to figure out which one suits your organizational cost, and then you need to pick it out. How far will AI have its growth in India? Um, Exponentially. I mean, I think we will be at the forefront of creating a lot of disruption in this space. A lot of Indian IT professionals, Indian tech professionals are there creating a lot of changes in AI. So I think there will be a huge growth. And finance professionals, we will not be far behind, right? Currently, are there corporate companies applying it? 100% yes. I myself, I use AI in my auditing. I use some of my companies use AI. There is a lot of machine reading that I've seen myself. One simple example I'll tell you is stock count through CCTV cameras was one method, but now RFID chips and just motion sensors are counting inventory, and I'm seeing that live. Cost of implementation AI in terms of training and infrastructure will cost how much in India? I mean, that's a very broad question, and I can't answer that. But like I said, today AI is expensive, but smaller portions of AI like RPAs, like machine readers, they are not that expensive, right? So companies will need to adapt whichever suits their organizational strengths. Will there be development of software for implementing companies? Yes and no. So yes is where if there is an artificial intelligence application available, you need to, what do you say, engage or entwine it or integrate it with your company's accounting and infrastructure. So there will be an implementation cost involved. Stock of inventory, can AI be applied? Yes, I gave an example just now. I think there are more questions. I'm sure there will be many more questions individually, but I think as a concept, this is still niche. It is still very nascent in terms of people's use. Unless you use it, you will not sense it. But the simplest example is our mobile phones. We inherently, subconsciously use AI on a day-to-day basis. Imagine this in the finance function, and look at all those transactions and activities that we do on repetitive basis that can easily be moved to electronic or an AI mode, and you can do more value-add matters. So that's probably I would respond to that. Okay. So there are more questions. So can AI act as red flag indicator? Yes, I gave such examples of where because it looks at 100% of transactions, there is an equal chance that every chance that it will pick up the red flags and then throw it out. To implement AI, shall we require additional investment or current software? 100% you will need additional investment. So you look at SAP as well. So SAP also, you would know, whoever is using SAP, there are improved models that is coming. SAP HANA is one such model. But then within that module also there are improvements that they themselves are making to enable cross, account balance reconciliation and stuff like that. But if it's a separate AI application, will it require additional investment? Yes, right. Can AI assist help in I don't know what it is, production budget for ultimately preparing the financial budget? Can AI assist? Yes, of course, we talked about that. Again, to understand AI better, logic is required or technical capabilities are required. It's both, because AI is nothing but an algorithm created by us, right, human beings. So AI is not, you create an algorithm and say, you read this data, compare it with this algorithm and give me a give me an error, give me an exception, give me a report. So you would need the logic. So, but the technology to create that, also you need to have knowledge about it. While an IT professional may do it, you will need to understand technical capabilities of that algorithm as well. What will happen if the AI processes are not working effectively? So again, this is where we talked about in the presentation, is where every finance organization should not deep dive into AI just for the sake of it. You need to do a POC, a proof of concept. Look at how it is working for your organization, for your finance function, and whether the output is being as effective as what it was programmed for. Only if it is, then only you go scale up and go live into the production. Is the implementation of SAP not taking care part of AI process? No. SAP is nothing but recording of a transaction from looking at a particular underlying transaction, right? What is AI is doing several scales up, where it is picking up data, it is reading data, it is analyzing data, it is recording transaction, it's giving reports, it's giving exceptions. It's a lot more than just a journal entry in an SAP which gives reports. What are some of the important data analytic courses you would recommend for finance team to enhance skill set? So this is a difficult one. So as I said in the first question, there is nothing that comes to my mind at the top of mind, but you know, I can look at it and then share with the larger group. Any more questions, Selva? I guess not.
Sir. Yeah, because it keeps on coming now only, so I'm just compiling the same.
Okay, no. What are the common automation tools, RPA, that you can suggest that can be used for accounting? Again, I refer you back to the slide where we talked about the slide on accounts payable, payroll, cash management, treasury, and the general accounting. Each of those modules for each of those aspects, such as recording a transaction, processing the invoice, approving, is an RPA. And it could be a combination of these, could be one RPA. So all of these will be available, readily available by service providers, and which you can subscribe or buy it out as much. Now you have this software as a service, right? SaaS company, so you can subscribe to any of these RPAs as well to use in your account. Scroll down a little bit. 14 point. I'm not able to read. Silva.
I've just paused the screen. So is it?
Yeah, now I can see. EAB of ICAI created tailor-made course to prepare members, to prepare them for future. Good suggestion. Dugarji can take it forward. Hi sir, do you have any course on blockchain? Which institute, academic institute recommended, any organization? Again, anything to do with courses. I have a little short of information on that. Maybe I can share with you later. Certification, same thing. Does use of AI in audit requires approval by regulatory authorities? Very, very good question. So there is no such approval mechanism. I think we have gone past the license cards a long time back, but it does necessarily require that whatever application you use in your audit, you know, which auditing standard is very clear about, you need to be able to have the controls over the general IT controls, and also the transparency about the audit log, the use of data, all end to end. And so, like today, if you use an audit software, you will need to you know, be able to give your regulator the you know, if there's a requirement, the regulator to transparently show from initiation of transaction to the end. Similarly, if you use AI, let's say if you use machine reading in looking at invoices and looking at schedules, you should be able to service it. So again, you should be, you know, like how organizations use you know, certifications by their vendors who supply them software or supply them services. Similarly, you should be in a position to prove it to the authorities that your AI or whatever you use in your audits is up to the mark. So for AI, we need a good programmer to have more value. So it is like the same question, no, sir. So who asked this question years back? The question was, can I do audit or can I be a finance professional only if I know SAP, Oracle, and without core knowledge, or the other way around? So answer is always a mixed bag, right? You need to have a combination of core technical knowledge and some knowledge of technology. And in some people, the percentage of would be a little higher. So do I need to be a programmer to do AI? No, I don't think so. But you would need to understand what AI is and how to use AI to create more value. What is the general framework you use for building a POC, proof of concept? Any IT tool is only as good as built. What are some of the aspects that need to be taken care of when building an AI solution? I'll reference you back to that slide which you talked about finance leadership, which talked about the 4 aspects of building a proof of concept, right, or building an AI, right from what are my need to my talent to what are the outcomes that I'm looking for, and most importantly the proof of concept and scale up. So the general framework would be asked to be very simple. Say what am I trying to use AI for? What are the measured outcomes for it? And then what is the framework on which this AI will need to be built? And I'm not talking here about the IT side of the framework. I'm talking about the finance side of the framework, which you move from human build to a machine build. If supplier invoice has been received, how automation can be done through AI while it is manually required for checking the invoice by the human? This is precisely what is happening. Today, there are machines which can not only read printed language, it can also read written language. So I myself have a software which can read whatever I've written in my book and then replicate that into digitized typed data into my one of my IT systems, right? Similarly, there is softwares which can read manual invoices or electronically printed invoices or digitally signed invoices that comes into our system and capture the data to record a transaction. So how would it be manually? How would it be verified? We use the parameters system. As long as it's coming from a customer, capture the customer name, capture the invoice number, capture the value, capture the signature, capture the stamp, and compare it with the GRAR, and then record the transaction. Very simply taken, it is done, right? So that is what AI will do. Is it how we adapt to changing AI environment? It changes from company to company depending on the AI implementation. Absolutely, it is changing environment not only on the AI ecosystem itself, but it is the scale will change from company to company and function to function as well. And as that is the whole concept of doing this session and talking about this is evangelizing this concept that what is AI. If you start learning about what AI is, start learning about what AI can do and how it can create an impact, that is when we will also enable ourselves to go along with it. And obviously it will change from company to company and we need to adapt. As a CA, how effectively we can contribute for implementation of AI in client's location? Again, very brilliant question. Not just as a practicing CA, but I'm talking about CAs in the industry as well, in companies. I think we have a very important role to play in making sure that AI becomes a success for our organization or for our audit function, because there is a lot of benefit to this. And we, with core technical knowledge of the transaction initiation to end, we can conceptualize all the checkpoints that a machine can read or machine should do and make the machine learn it, right? Core technical won't come from machine. Core technical will come from us, and the knowledge comes from us. So you teach a machine to do it. Based on that, it will do all the non-risky repetitive jobs, which will free up your space. So is there a role for a CA? Maximum, the highest.
So those were the questions, sir, and many were asking for your PPT. if it can be shared with the members.
I will share. I will obviously share the PPT.
Sure.
But I think maybe as a closing thoughts, and I think it was 2 hours of wonderful session. I enjoyed speaking and sharing my thoughts as much as I hope that you have enjoyed listening in. But it is a very very interesting topic. It is not for people who are only those who are technologically driven or technologically leaning kind of persons. This is something which is not which is for everybody for us. So I only recommend that you look at it this seriously. Look at understanding this. This is going to be a change. This is going to be a game changer for all of us. Will there be a lapse of internal control if AI is not implemented not effectively? No, I think you're confusing. This is not an application. This is not something that will replace auditor or the accounting function. Internal control is a much larger canvas about a particular whether the control is effective or not. AI is only enabling each of those processes. So AI that on its own will not, lead to lapse of internal control. Good. Dugatji, any thoughts from your side?
No, sir, I think he has left.
Okay.
Yeah.
No issues. So thanks, thanks
Thank you.
everybody for patient hearing. Thank you very much. Have a good evening and a weekend.
Thank you very much, sir. It was a very crisp and eye-opener for many, because the misconception of artificial intelligence as an application, you have removed. That is the common understanding of many, and it is only upgradation of the activity. That is, it cannot replace the CAs. It can only supplement the CAs activities, and also many of the routine jobs will be taken over by artificial intelligence, but not of CAs. So it will definitely help or supplement the CAs. So it is at the doorsteps of the CAs, and blending technology with the core knowledge through AI should definitely equip the upskill these CAs in this highly high-tech environment, and make the professional job more qualitative, more remunerative, and also more competitive. So these are the words taken away from your presentation. I was very keen in observing all the important tools that you are using, and it's so nice of you that you are sharing the PPT also, and that will be definitely useful to the members at the later stages, wherein how to, if at all they are confused, they definitely it is so self-explanatory that through your PPT presentation they can make out their clarifications or get their doubts clarified. So thank you very much, Manish Muralidhar sir, for your time and your passion in this field. We are very proud at SIRC to see so many high-tech CAs of late, and we have been inviting the speakers or experts across the country. And this, as you rightly pointed out in your speech, this pandemic has made us to become tech savvy, and this technological upgradation also is happening much faster than it was what it was earlier. So these are, we are trying to update ourselves, our members, to catch up to the present situation, and keep themselves very very relevant and highly to provide the qualitative services. Thank you very much on behalf of all the members. I thank all the members also for this participation, and also in absentia my chairman for choosing this topic to be part of the deliberations today. So very good night for each one of you. Take care, and third wave is at the doorsteps as artificial intelligence is. So please be cautious, and see that September and October are passed over safely. Thank you very much, the SIRC officials and also Selvas. Thank you very much, Manish sir.
Thank you, Panaraji. Thank you, Selvaraj. Thank you very much.